Let me make this as simple as possible for you. If you are bullish, you want to buy below opening price of a bullish daily candle. If you are bearish, you want to sell above opening price of a bearish daily candle. Every single day, price opens wherever it opens, and usually if you're bullish, you are going to get some form of manipulation to the downside, supporting your bullish bias, mitigating into an order block onto the left, or a fair value gap, or a breaker block for you to take advantage of. Likewise, in a bearish daily candle, price opens, it manipulates higher, and then likes to break lower. Typically the manipulation phase happens in London session. This entire candle here represents a daily candle. As you can see, price opens right here. Price retraces all the way up into this order block here, and then price sells off, creating a bearish candle. So how can we get involved in the market? Look at this on a smaller time frame. Price opens here, price manipulates higher into this order block. You're bearish overall. Don't make this more complicated than it needs to be. You can sell from this order block, targeting a new low, and that is how you get into the market if you're selling above opening price. This could be the biggest light bulb moment for you in your trading career. Watch this video as many times as you need to. So each candle is a daily time frame. You can see here we're bearish. If you want to sell in direction with the daily time frame, you need to be selling above the opening price to this candle. For example, if the open starts where this line is, natural price action is that price will move higher first. This is where you want to sell because you are above opening price, because when you do, the candle will do something like this. This here is your wick, exactly like the candle here, and then price retraces back, closing bearish. Let me show you an entry on a smaller time frame. These two blue lines indicate 1 day's worth of price action. As you can see, price action opens this area right here. Price travels higher into this inefficiency right here. When price comes into that inefficiency, we can then go on to a smaller time frame to observe price action. Price reaches into these levels, leaves another area of inefficiency right here. This can be your entry because you are above opening price. So when you are bearish, you want to sell above the opening price. If you're bullish, you want to buy below opening price. You can get entries like this every single day if you follow the overall trend of the higher time frames. I challenge you to backtest this and see for yourself.
If you've ever wondered why you're not profitable yet, it's because you are not paying attention to the higher time frames. The higher time frames is literally your cheat code to be a success in trading. This is a weekly time frame, and no one takes the weekly time frames seriously. But this is going to give you so much information into the direction that price is likely to go overall. And if you want to be successful in trading, your most consistent results will come by going in direction with the higher time frames. What moves price in terms of institutions and banks does not pay attention to the volume that happens on the 30-second time frame, on the 1 minute time frame. Yes, you can refine entries within those areas, but the higher time frame is going to give you clearest picture on structure. From the weekly time frame, I've come on to a daily time frame. You can see the reaction that we've had from that weekly imbalance, which is here. We've created another sell side imbalance. We've then created another sell side imbalance right here. And then most recently, we have got this daily order block. And in terms of targets, we can see clear equal lows, which signifies liquidity. For me, this is extremely bearish, and I've utilized that starting from the higher time frame. So I may go onto the smaller time frames to look for lower time frame entries for better risk reward. I've done that by building a base and foundation from the story that is being told on the higher time frames. Look at what the higher time frames is doing, and it will propel you towards a more successful trading career. Something which is critical before you take a trade is to understand what your confirmations are. So we need to know the bias on a higher time frame first. What we can identify is that price has broken structure to the downside, and it's come back up, rebalanced into this fair value gap. It has also respected this order block, and then from that area we had a really nice reaction coming lower. Now, targets are absolutely everything with this, and what I can notice here is that we had this liquidity which price made a run to after respecting this bearish fair value gap. So now we have to ask ask ourselves, what does that look like on a smaller time frame? Well, that's the reaction from the higher time frame. Now coming back down again, we can see another sell side imbalance has been created. So what I'm looking for now is time that I want to enter the trade and the reaction that I'm getting out of this particular fair value gap, because this is bearish. So I'm looking for sells and sells only. So this is the reaction. And as you can see, price swept above this high right here, just at the London Open. And then price dumps to the downside, creating multiple fair value gaps. Now we can see price has reacted from this area right here to the downside. We can obviously see targets. So I'm going to go down to an even smaller time frame to see what price is looking like coming even lower. So I can see what would have been an excellent trade opportunity right here, because price came down, created this liquidity here, left behind a really nice imbalance and came right back into it, as well as coming into this order block. So you could have entered at the